Good morning, February 8th, and we were already a week into establishing our price selections for the 25 year. Things look a lot better. In fact, I would argue corn has crawled a little bit above break even this week for the 25 crop, up 6 cents for the week, and December contract I think was up 5. March soybeans up 8 cents. March Chicago wheat, actually the wheat was the strongest this week. March Chicago up 23 cents. Minneapolis up a little less, 12, because we import Canadian wheat in Durham. So the fact that they solved that problem on Monday uh, actually was not as good for spring wheat as winter wheat. But of course, that problem was last weekend we went home thinking tariffs would be on a 25% rate for Mexico and Canada. But by noon Monday, that was solved. That a nice upside reversal in the grains and some follow through strength. Also, cost structure is going down for agriculture. March crude down a buck 53, and that rather very positive for the grains was the dollar was lowered to minus 0.289. April gold also rocketing to new all-time highs, up $52 for the week and closing with new highs. Is there possibility of inflation out there in the precious metals market, and does that spread into the grains? Very interesting developments. As far as these charts, very positive developments. This was Monday trade. We went home thinking tariffs would hammer the markets and end our uptrend. And look at this big down day to start Monday, Sunday night, Monday morning. And boom, we reverse higher, upside reversal on the day, and the market closes higher for the week. Wow, what a turnaround from last Friday. And the bull market is alive and well in corn, very likely to come up here and challenge that 510 area on the corn. And maybe that's not a bad place to make some sales because you'll be at the yearly highs of corn. But look at the soybeans, much different situation. You know, you just basically made a bottom, a bear trap for the people who wanted to sell at these very low prices, below $10. And all of a sudden, the beans reverse higher. And look at that, a nice upside reversal in the bean chart on Monday. And bam, we got new recent highs in beans this week. The bull market has just begun in the soybeans. And man, we could go quite a ways here, you know, like 11.50 or $12, 12.25, a potential target, if it does what the corn did. And actually, once we switch acres in from corn, from soybeans and wheat into corn, the potential for the new crop soybean market is going to improve significantly. We don't have break even yet on soybeans, but we're getting closer and closer. And same thing here in the wheat market. Wheat just made its new bottom, although the cash market bottomed earlier. But look at that on Monday, new lows on early Sunday night, Monday morning, and reverse higher, upside reversal on the day. We expected tariffs to hammer these markets lower. And this is nothing at all like the 2018-17, where the U.S. was in a trade war with China. The U.S. won that trade war. China exports the same amount to the U.S., and we're collecting 25% tariffs, put another 10% on China. I think actually the wheat market is telling us that China is getting ready to buy wheat. I think they're going to honor their old agreement, which, you know, Biden threw out for the 4 years he was in. I think they're going to have to honor that. Quite honestly, that would help the balance of payments, and it would help their trade balance, because I think those 10% tariffs on China will come off. All they have to do is buy a few billion dollars, $5 billion or so of wheat, and all of a sudden they would have their $40 billion of tariffs on that 10% come off. It's a win-win situation for China. I don't know what they're doing to not do that. They need to buy wheat, corn, and soybeans from the United States. And I think the way this wheat market is trading, it's almost a sure thing. China is not stupid. They're very pragmatic. Even though they're a socialist communist country, I think they're going to come around. And I think the wheat market knows it, actually, if you could see by the way this market is reacting. Bull market has just emerged in the wheat. We aren't at break even yet for 25, but we're getting there very, very quickly. Spring wheat also not quite as good of an upside reversal and not as good a performance this week as the winter wheat, because actually tariffs on Canada would prevent spring wheat and durum from coming into the United States. Canada, a big exporter to the United States for those two crops. So not as strong a reaction, but you can see, obviously, we got a different deal with China, and the wheat market is acting like China is going to be buying wheat. Wow, we could get up here to those recent highs in wheat. A $7 area, I think, is going to be a break-even market. We can get here between $7 and $7.60, $8. We're going to have an opportunity to make some money in the wheat market. And I think that's actually, with just turning trends higher and all things pointing better for agriculture, I think that's a very good possibility. Here's another good thing happening in your cost structure. You had crude oil, rally $10 when Ukraine stopped allowing Russian natural gas to go into Europe through Ukraine at the end of December. And wow, look at this. We've almost dropped $10 back again. We had with the tariff thing, a potential upside, rally again, but actually we end up forming a downside reversal for the week on the weekly crude oil chart. We've clearly broken that short-term uptrend. People are talking about solving the Ukraine war. I have heard some interesting things about that conflict and the potential settlement. Wow, there is almost a downtrend well established here in the crude oil, and that is also helping the profitability for agriculture in 25. In fact, one of the biggest developments here, when that tariff threat was pulled off for Canada, look at this. We started taking the dollar higher and reversed that lower as well for the week. So the dollar we gained 10%, and the dollar may be showing some weakness here. It's very interesting. A lot of things have improved for agriculture. We could export a lot more. We can get this dollar back down to 100, 102, 103. The exports could improve considerably. And so things are getting a lot better for agriculture. And if you look at these charts and commodities, look at the gold market rallying and closing at new all-time historic 6,000-year highs. The old saying, close your eyes and buy new highs, because there's something fundamental going on here. Gold is obviously in high demand in a lot of parts of the world, and it's running to new highs. Astounding, because the other commodities have not done anything like that. Gold is precious metals are kind of doing that on their own. I wanted to give you an update on the profitability of these grains. I think corn just went to a break-even value, and I've talked about this harvesting ECO, so I'm not going to go into it in a lot of detail, but corn up 5 cents this week. These calls got a little more expensive. Now we can collect all of the premium and another buck by selling calls on 20% of our corn to pay for our ECO. Leaves a maximum price of $5.08 on that 20%. Actually, we can guarantee a profit right now. In fact, by buying that ECO, 95% minimum county revenue guarantee. We have the upside open on 80% of our crop. Basically, we are at break even. I think these are the new crop futures prices. I'm giving you like a risk management scorecard here. Wheat at $6.59, Minneapolis CEP, corn $4.66. I think we're at break even here in corn. And if you look at our risk management scorecard, we can lock in break even. I don't think we're there yet on wheat and soybeans. Soybeans at $10.58 this week, up as well on the new crop November 25 contract. I think when we get to 11, we'll be able to lock in break even on this ECO program, harvested ECO program. Wheat, we probably need to get to $7 or higher. But look at those charts. There's a very good possibility of that. Wheat and soybeans, especially once we shift 3 to 5 million acres of corn, of wheat and soybeans into corn, that's going to improve that outlook for wheat and soybeans. We're going to get an opportunity to make money later in the year. But you got to be ready. You got to be ready to execute. You got to be ready to sell those calls. Actually, in the case of corn, maybe we should be selling them now in February and lock in that minimum and pay for that ECO insurance. You're going to have to buy that ECO insurance. And here's why. You want to get the red out of this crop year. In the case of corn, pay $12 for EU 75% insurance. we're at 466 as our break even, you still have 25% at risk. The ARC program, the farm safety price support, I showed these numbers. It went up considerably from 24 in wheat, over 50 cents, corn almost 20, and soybeans $1.05. We're going to have a 10% extra minimum with that ARC program this year. Wasn't there last year. Actually, we can do a better job locking in break even or a profit this year than last year, because that ECO is also subsidized now 65%. Everyone needs to buy it because that's going to take the risk out in what this year is going to be a defensive year. You're going to have to get yourself to break even or a small 1, 2, 3, maybe 5% profit and an outside chance of a 10% profit margin. But you'd have to be very, very good at marketing. You have to, if you sell that ECO, you add 9% minimum, you only have 6% left at risk. Now you got to market to get that last 6% out. And with the ECO, your revenue, and your ARC coverage, you have the risk management tools to get aggressive in your marketing program. So you're adding another 9% right now above that 94% level by selling calls. That maximum price in corn goes up to 508 right now. That's about 9% above the current market, 466, when you sell call options. So you are at a 3% profit right now if you make all of those risk management decisions. And it is a fantastic risk management program. That opportunity has emerged this year for the first time. And Progressive Ag is going to help growers take advantage of that. That leaves the upside on 20% of the crop. Or actually, you give up the upside on 20% by selling those calls, and you pay for that 9% extra minimum ECO. The minimum is come break even, or in this case, a 3% profit for corn. That's if you have a 466 futures break even on corn, and we're right there. 80% market upside, and you need to market well. You still have to market that other 80%. Basically, I think we need to take advantage of this opportunity. So we're introducing 3 new Progressive Ag ECO programs. ECO Plus, basically where we sell calls on 20% of our crop to pay for the ECO. Then we still have to market the crop, that other 80% of the crop. Of course, for dryland producers, until you harvest, you probably can only market, 50, 60% before you pull that crop off. And in corn, you're probably going to have to market earlier this year because we're going to attract acreage to that profitability in corn. ECO 5, we still sell those calls, but we use that ECO RP to market the last 80% of the crop for a goal of a 5% net profit margin. I think there's a 90%. We're already at 3% profit margin in corn. I think that there's a 90% chance we'll have that opportunity in corn, 80% in soybeans and wheat. It'll be later in the year on soybeans and wheat, I believe. The ECO 10 these are ECO 5 to lock in a 5% profit margin. ECO 10 to lock in a 10% profit margin. This is a much more aggressive program. You sell calls on 20%, that's all done. You get the ECO. Now we have the risk management program in place to do an aggressive job of marketing. And the worst case scenario is you have a 95% minimum revenue guarantee off of that February price in case you don't get anything done. But I think you can be more aggressive. The ECO to market the last 80% and your revenue program to market the last 80% with a goal of a 10% profit margin. If your costs are 466, you're basically looking for a 46-cent profit margin. You're going to have to get up to 510 or so on that new crop corn average. But a lot of times we get opportunities. I think the chance of that this year is not as great. I think this is a defensive year, but you might be able 70% chance of doing that in corn and maybe 50% in wheat and soybean. So it is a very interesting situation here. We have the potential to lock in a profit margin. My calculation's 3% in corn, not yet on wheat and soybeans, but you have to put a basic risk management program together and you have to market with it. And you have to market it between planting and harvest. And I think we're going to have an opportunity to do that. But wow, There's a lot of moving parts. Make sure you have someone who knows how to operate with those tools you put in place. Number one, your revenue crop insurance. Number two, your ARC, farm safety net. Number three, the ECO at 95%. Of course, you have to buy that by March 15th. And then most importantly, number four, you have to market your crop when those opportunities present themselves. And I think they will this year. So a lot to think about, but things are definitely moving in the right direction with grains going higher, energy is going down. We're looking at a better profitability situation. You have a great weekend and good marketing.